what's happening within the MFI space, and the loan collection is clearly seen an uptake. What's the outlook then on asset quality, credit growth trends? Let's talk about all of that. We have with us Rajesh Sharma, MD at Capri Global Capital, joining in on the show. And we'll be joined by Singh from Satin Credit Care Network as well just shortly. Rajesh, hi, good morning. But first, if I could, begin the discussion with you. First quarter clearly has proven to be very challenging for the entire industry. The asset quality has deteriorated. There have been lower collections, stalled disbursements. Help us understand whether or not you're seeing a recovery kicking in, and how long has the recovery actually happened? Has it been since July onwards itself?
Yeah, good morning. So, post-July onwards, the collection has improved, and if you talk about asset quality, while some small percentage requests in MSME segment have come for the specific clients who are facing difficulty in cash flow for the restructuring, and barring that, the most of the clients still able to meet their requirement of July EMI because business has started. If you look at the August trend, when our repayment cycle was the 5th and 10th, we have seen the healthy trend. And the festive season is coming up. So on ground, our team are busy meeting the prospective clients' requirement and going in rural market where our branches are to assess, because we feel after the COVID, this will be the perhaps first Diwali will be not much restriction, and we can see a full-fledged demand coming up. So we are gearing for that. So there should be a good credit growth in next 3-4 months. And asset quality with the opening up of economy and economic activity in markets, I think business should be back to normal. We are seeing first time the recovery trend in the range of about 90% collection efficiency, which is a very, very good trend. So we are quite optimistic and gearing up. Our disbursement also month after month is growing. So we are clearly hopeful and excited about that. Slowly we are coming out of the COVID situation. The vaccination drive is going up. So in totality, we are quite hopeful and seeing a very good trend.
What is your assessment, Rajesh, on the credit demand on the back of resumption and the onset of festive season as well? Are things looking brighter as we move forward towards the festival season?
Yeah, so there's good credit growth and demand in MSME segment is coming up. Last 1 year, there was a lesser activity, and now we are seeing that the people hope has come back. They're more confidence we are seeing with these MSME prospective customers, where they are asking further money. The existing customer are asking the top-up loan to meet their business requirement. So we believe that we should see the good days again without any much obstacles of lockdown. Even the rural market and semi-urban market, in all the spheres, whether it is a smaller trading shop or be a smaller manufacturing activity or a small restaurant, everywhere across all these small businesses, we are seeing the activity is growing up, and same is reflective in their collection efficiency as well as the demand. So last month, we are nearly pre-COVID level kind of a disbursement. In fact, we have added 400 more people on the ground and opened about few more branches to our existing geography where we are operating in, to looking at this trend. So, in fact, we have added, after 2 years, we have added more people and more branches.
Oh, that's excellent to hear, Rajesh. This is Alex joining in as well. But I just want to understand in terms of the geographical spread of this. Just to get a sense from you whether this is broad-based, or are there certain pockets that are still giving you a cause for worry? There is also, apart from the COVID-19 pandemic, the worry about the rainfall and how that will pan out. Now, SkyMat is coming in with a projection that it's going to be below normal in all probability. Is that also a cause for concern for you?
So geography we operate in are primarily Maharashtra, Gujarat, Madhya Pradesh, Rajasthan, and NCR region. We have about total number of employees 2,000. About 1,000 employees are at the front end who are handling our customers on the ground. And while we have seen that demand has come back, and most of what our customers in MSME segment are in the support of the man economy. They are in the service side, be it a small restaurant, be it a small snack making, small organization run by women, or be it a tailoring shop. These kind of activity where we have seen, and now wedding season and festive season is coming back, where we see a lot of activity. The customers are preparing themselves. So we are not seeing any. We are seeing week after week the improvement in the demand, login of the customer, and our disbursement. So if we see clearly trend in last 12 weeks, it is growing week after week, and I think we should be able to disburse same amount of money we should disburse 2 years back. And in fact, next month we are targeting a growth over our previous disbursement. So we are seeing a healthy trend in this. Demand is back, and so is the collection efficiency. And what giving us the confidence more than the demand is the collection efficiency, that yes, customer is able to run their business and meet their repayment obligation. I think that is very big positive for us to go forward and don't do lending in a restrictive manner, but open it up completely the way it was pre-COVID level.
Okay, I just want to get some numbers. You said that you're hoping to go back to levels that you achieved before the pandemic struck. Rather your disbursements have already hit that. But in terms of growth, can you specifically talk about numbers that you're going to hit or you expect to hit in this current financial year? Of course, hoping that we don't face any more headwinds, Rajesh.
So hoping that whatever this talked about third wave will be limited and there will be not much lockdown and all. We have already achieved 150 crore rupees disbursement in last month, and we hope that we will achieve our full capacity by end of September. So we will be achieving about 250 crore average per month disbursement capacity. And by this, we are targeting a growth of about 25 to 27% in this financial year. Last year, despite all hurdles, we achieved a growth of about 18%. And this year, we are targeting a larger base, about 25 to 27% growth. So while we are in MSME segment and affordable housing segment, we are confident with our distribution network, our physical branches in place to achieve this kind of a growth. And I think this is a healthy growth for us.
Right. Mr. Singh as well is with us. So let me get him on board as well on the conversation. Mr. Singh, you've maintained a very cautious stance given that new disbursements are a main focus, and, there is a renewed focus now on maintaining asset quality going forward. Help us understand what the current situation is and whether or not you're seeing any revival on ground, especially given that the festive season is at the onset.
So I think if you look at on the front of disbursements, I think the disbursement has started picking up from the last month when the lockdowns eased off. This month, if you're talking about, we would technically see a revival in disbursements to the pre-COVID levels by September. So the flow of the disbursements probably have been picking up since July onwards, and we hope to reach the pre-COVID levels by September. On the collections front, definitely yes, the improvements again are there once the lockdowns have eased off and the restrictions have gone. July was again a month where the collection efficiency has gone up. August again, we're seeing a spurt in the collection efficiency, and we again on the same anvil, we hope that by September, the collection efficiency will also be back to the pre-COVID levels. So overall, looking at the festive season as well as the agri crops and everything coming up, and the monsoons being pretty good. All across India, I think the revival is now there on the cards.
Okay, hi Mr. Singh, this is Mubina as well joining in. I want to talk a little bit on the asset quality front. You mentioned that collection efficiency is improving and hopefully it will be just about near or at the pre-COVID levels by next month. So, what are you seeing right now? How far are we from, normalizing in terms of collection efficiencies, and also if you could throw some color on asset quality too?
So what happens is once the lockdown eased off, July was a month where we started touching close to about 90%, and as we go forward month by month, the collection efficiency rises by about a couple of points, every month or so. And that's the reason why I said if it was 90% in July, it comes down to about 92, 93% in August. And by September, our pre-COVID levels in March were close to about 100%. So we would technically reach close to about 98, 99% by September, and that is where how collection efficiencies are coming up. On the asset quality, I think the revival is there, but what happens is technically that once a borrower which gets into a par, for them to really come back and finish off all their installments in one go is kind of difficult. So the tail is going to remain for some point of time. But the biggest factor which is probably coming in is that the unpaid clients which were not paying during the course of the lockdown, as well as maybe right after that, has started coming down quite sharply across over there. And that's a very positive sign looking at the overall credit asset quality.
Okay, that's good to know then. Mr. Singh, we have the festive season as well coming up. Hopefully this will be a good one and there will be no signs of the third wave. Let's pray for that. How are you assessing credit demand ahead of that? Are you seeing any signs perhaps of, credit demand picking up with more gusto ahead of the festive season?
So early days as yet, but yes, definitely yes, the uptick in demand for disbursements has really come up, and if I compare August as compared to July, definitely there's been an increase in the disbursements. But having said so, I think, for us, the festive season along with the normal monsoons are both aggregators and driving forces for us for the disbursements to pick up. Definitely yes, the festive season did definitely see a spike in demand in our disbursement. But along with that, the monsoon, which also has been good all across India, is also a further spike in the disbursement which are going to be there. So both put together, I think we're seeing a rise in our disbursement in the coming months as such.
Mr. Singh, how are you expecting credit costs shape up from here on?
See, that's what I said, the tail gets slightly longer, once a customer comes into a par, which is portfolio at risk, But having seen the positive impact, as I said, in the unpaid clients, clients who had not paid even one single installment in the last couple of months, we are seeing a recovery in that. The customers have started paying their installments. We follow a bi-monthly kind of a mechanism of taking installments. So once a customer starts paying, that whole issue of not paying probably dies down to a large extent. But for them to really cover up the whole installments which have been overdue takes a while. Our sense is that the credit cost will remain in single digits as such. I possibly cannot have numbers right now, but yes, the way it was being factored in during the time of lockdown, as well as the restrictions were there, are probably far less now because of the unpaid clients now started making their payments for collection. So my own sense is that the credit asset quality definitely will be in single digits, but what numbers I probably cannot have a handle on it right now.
Mr. Singh, Alex joining in, and you've spoken a little bit about how you expect disbursements to pan out. You say that you're confident, or rather you're hopeful based on what you're seeing on the ground. But I do want to understand from the perspective of how you view the market, how your team views the market. There are lenders out there that have taken a much more cautious approach, anticipating that in the period of uncertainty that we're in, you could face headwinds very, very easily, and that third wave of the COVID-19 pandemic is in fact still staring us in the face. are you going to take a very cautious approach in the rest of the financial year before you really, go all guns blazing on the disbursement side?
So what we've factored in as a whole year as such, we've only taken up our growth in our asset and growth in our AUM to about 7 to 8% for the full financial year. Having said that, we've lost practically the first quarter of this financial year. Now, when we look at a growth of about 7 to 8%, which is as compared to what our earlier growth used to be in double digits of about 15 to 20%, I think it's still tepid in terms of the growth which is there. But the fact of the matter is that having lost 3 months in the first quarter, I think, we are taking a cautious stand, but definitely, yes, when the demand is probably coming in across the field, we have to really cater to that. So that is what we are trying to look at it during these coming months now, having put together our whole infrastructure and everything getting back to normalcy. When the other factor is what people talk about the third wave, see, we are not seeing any kind of a factoring in of the borrowers actually looking at maybe a credit spike or maybe a spike in the growth for them also in terms of their income generating capacity on the ground. Once we try and look at that, I think it has to match with the credit facility which we have to give out to them in terms of disbursements. It's cautious, definitely yes, but it is not that cautious the way we are looking at it, that it probably goes down to where we have a flat year as such, or maybe we are bringing down our growth from there. Growth is still there. It's close to about 7 to 8%, which is what we are looking at. But yes, it comes in maybe slowly and steadily. Last 2 months has been very cautious, but yes, we are opening up our purse now and looking at how disbursement would probably come in on the ground. So that's how we are looking at the whole scenario for microfinance.
I take that as an optimistic view of the current situation. Thank you so much, Mr. Singh, for taking the time, and wish you all the best for the future. We look forward to speaking to you very soon. All right, let's